In this video, we're going to pass along an entire strategy that, in fact, has an 80% win rate. We're not only even going to tell you where that number comes from, but show you real-time examples of trades that you could have been involved with over the past couple of weeks. So stick around. Here is what is coming up in this video. We're going to explain the strategy step by step, lay it out right in front of you. What is the win rate and what does it actually involve? So we'll talk about that coming up. And no strategy is perfect. We all know that as traders. Nothing is going to win 100% of the time. So we'll discuss what to look for. Stick around. We'll discuss what to look for to ensure that you are still heading in the right direction. And a special bonus coming up at the end. So stick around for that as well. To kick things off, Neil is going to run through the actual strategy. Here we go.
So our strategy is around IPOs. They are in the news. They are hot. You can get the issue price if you're lucky, but then a trader's interested in something else. Once the stock opens up, we're going to look at that opening print. Get the opening print to the long side on an IPO that is large enough, and we'll get into that. And then, of course, you have to have an exit point. So a lot of times you're looking at that first obvious round level of support when we open in. You know, today we had an example of Krispy Kreme, so I'll just simply tell you this one was priced. It was to be priced at 21 to 24. It ends up being priced at 17 even. And then once it opens at 16.30. The stock went all the way to $20. We'll get into the nuts and bolts of how you execute the trade. But when you first get into this, you got to have a resource and, of course, know which IPOs to target, right? So make sure you're looking somewhere to get a list of IPOs that you can have access to, and then you want the big ones. If you've never heard of it, then that probably doesn't matter. Krispy Kreme had hype. That's one of the reasons why we dig into this. Do all of them work? Absolutely not, Sean. But the key here is you must have the ability to get the opening print. That is a source of liquidity that allows you to get a particular price and scale because you can put larger share size in that opening print without having to worry.
All right, let's go. Here we go, donut time. So, Krispy Kremes, they come today with a lot of fanfare. So that was one of the points there that you want to look for. You want to look for IPOs where there's a lot of fanfare. We have one that works, and we're going to talk about DD, one that didn't work. Here's an exact example, man. We talked about putting on real-life trades. This happened right now. This is today. These are live trades right now for DNUT, okay? And the strategy is you take that opening print and you don't get out. Your out is going to be the even dollar below. When it's a $16 name, it's simple. It's $16. Or you can maybe use $15.50 or maybe even $15 as your eventual out. This wick doesn't happen all the way down there. It opens up at $16.30. Now, you can take as many shares as you want. 100, 1,000, 10,000, 10, whatever you're taking. You take that opening print. And then this is the winning strategy. Not every single IPO is going to look like this, where it basically goes straight up. So the idea is you empty a bunch out here at another key level. So our level is 17 right here. We get a 16.30 long, and then you get them out 16.50 a little bit, then 16.60, then 17, and then you take them out on this bump up. This is $1. This is $1 win right there, out at 17.50. Where you get them out is irrelevant, but the key is here you hold at least that 10% to see if you can't take a moonshot. Now, this is going to go way higher, but I held it. I let it go all the way up here to 19, fade all the way back in until we again found another key level. I chose 1850 as where I was going to get out. We let it bounce around. Unfortunately, I'm not able to get the very, very top here, but that's an example right here where it works. You take the opening print. Where was my out going to be? So we're long at 16.30. I was going to get out at 16 if it broke below. That's a 30-cent hit. So you take out about 50% of your position for that hit. So now you're playing with house money, right? Because you've put those profits in your pocket, and then everything after that is cash. Make sure you save that last 10% to go long, to hold your long to make out for one of these potential big-time trades. You saw Snowflake go up like $100. Lots of names just went bonkers off the open. One more example of where it worked again, and I'm going to call up DoorDash. This is a little bit longer. This is back in 2020. This is back in December of 2020. And here's an example for DoorDash. So DoorDash IPO's right here. 182 it comes out at, right? So where would your level to be out? Again, this is a $182 stock, okay? So you got to give this more than $2. $2 would be here to 180. You're still fine if that's the trade that you take, But you don't do that, right? You're going to give it probably back to about 175. I like to trade off those even levels. This is sometimes the hardest part, is figuring out where your risk tolerance is going to be. But for me, $180 stock, you take that down a couple bucks, 175. You get the opening print, okay? This is a 1-minute chart. So if you're going to give yourself $5 worth of risk, look what happens in the first candle. You go right up $5. So the very first candle, 182, right? It tips out right there at 186. So you're starting to take a little bit out at that point, right? 186, you're starting to take a little bit out. Then you get the explosion. You get a red candle down. That you don't get out on that because that doesn't go down to that 175. The next candle goes all the way up to 189. This is where you're slowly starting to get your shares out of this name. So you want to get them out, right? So you get out about 50%, maybe even more as that goes. As it falls back in, you're basically getting them out. You find some key levels here, 182. You let it go up to the upside, just same way Donut did. And then as it falls back down, give yourself some key outs here. You're telling yourself, maybe if it breaks this 180 now, you're going to be out. Maybe if it breaks lower, you're going to be out. Here's the breakdown. It still doesn't break that 175, guys. You can get all upside again. By now, you may be out of your trade. You're holding that last 10%. When it finally breaks your 175 area, that's where you're holding your last 10%, and you do take that hit. DoorDash, another great return. Not fantastic, but the return is there for you on DoorDash following those very, very simple rules.
All right, here we go. Number 4, I guess we're on now. Here's another one that did actually work out quite nicely, and we'll jump right into the chart here. Another one from this week, in fact. And side note, look at what this thing is doing today. Day number 2 here. Yeah, we're all the way up to 54 on YOU, guys. Clear Secure came out yesterday. And we'll double check here on the actual opening price, which was 39 even. So 39 even. Sean was just talking about even dollar levels. There's 38 down there. This thing doesn't come anywhere close to 38. And yeah, it gives you nothing but upside. This gets as high as 44.75. So if you take 39 on the opening print, this is 5-6 to 1 if you want that much on the risk reward. So an excellent opportunity there for Clear Secure, another IPO that came out this week and worked very nicely. Now, yeah, not all trades work, right? We're not in the game where it's 100% win rate. So Neil's going to walk you through one trade now that actually doesn't work, Neil.
Yeah, this is going to be Didi. And why I love this example is because it might seem like this was going to be the one that worked out, but there's 2 important things. Yes, it does go in the green. And 2, if you don't follow your stop rules, you get yourself into a lot of trouble in one that doesn't work. So the issue price comes out is actually 14. It was definitely hyped. This is the Uber of China, like big ride-hailing company in China. And that $14 level, don't have to worry about it. We open up at $16.40. So just like the logic Sean mentioned here, in a cheaper stock, you're looking right back at a 16 stop. And it's pretty simple there. You get that 40. You're thinking probably that 1-to-1 to start taking shares out, as Sean mentioned. Maybe you get that home run for like a 10% move. It does give an initial move up to 1680, so it gives you a chance to get some shares out. But I want to show you how this is a very, very quick move. To say that you're going to execute perfectly and catch it at 80 is a little bit unrealistic. It then dips back down here and then tests again and maybe gives you a little bit of a shot to get a piece of it out. More realistic that you might have covered a quarter or a third or half at this level here at 1680. But it then comes right back in and then tests this 16 level. And once it breaks, I can tell you, if you had a hard stop that gets filled, fine. You got a 40 entry, you probably slipped a couple of cents. At worst, you can lose 43, 44 cents. At absolute best, you could have been break even on this trade. But I think when you're back testing, you assume slippage. You shouldn't assume perfect entries and exits. So in this particular case, you are going to be in a loser. But what is important about it is that 16 level was the key. And so long as you followed that rule, you're not losing the extra $1.50 on the trade. That's the key thing here. Like if you just held on to it and said, I'm giving it to the issue price of 14 even, well, I mean, fine. You actually would have still been in the money. And then when it went up today, because the stock is trading right back at the highs, fair enough. But you didn't have any rules. So you had to have that rule at 16. It saves you a bunch of money. This is an example of one that doesn't work, despite the fact that if you just put on rose-colored glasses and pretend you get any fill you wanted, you might think that this is going to fit the bill of a winning trade. But DD, one that did not work, although it fit all of the other parameters. Just make sure you stick to those rules.
So it's very important that we understand not only that a trade doesn't work all of the time, guys. We're not in the 100% business. So yes, there is going to be downside. If there was one or two things that we could look for that might signal, the environment has changed, the conditions have changed, and the sentiment overall behind IPOs has changed, and we might want to be cautious with that strategy, what would that be?
So, I mean, a couple of things. One, you're going to look at, you always don't just back test, you forward test, right? You should be tracking your results as you're taking these. And if all of a sudden you see a big change in the win rate down below that 50%, that's one thing you can look for. Also, look at the performance of the overall market. If the market is incredibly weak and you're sitting, right now we're on highs as we film this, but if you're sitting in a market where you're testing lows and there's fear all over the place, that might not be the best environment. And always look to see, how does it open relative to that issue price? If all of a sudden you're not getting those premiums and there isn't that excitement where every IPO is opening right at the issue price and then breaking it, even the smaller ones, that can be a signal that the hype is not there for the IPO strategy. You want there to be that positive IPO environment.
I'll give you one more here, just real quick. What I've noticed, now especially that we're looking at IPOs all the time because we do have this strategy. Most of the IPOs, notice the time here actually on my chart. If you can, thanks guys. 12:50, right? So they're all opening around, let's call it between 12 p.m. Eastern to about 1 p.m. Eastern, maybe even a little bit later than that, like 1:30. So my caution on this idea is, obviously, if it opens up earlier, that's completely fine. There's going to be no problems. But if the IPO is supposed to come out during the day, right, and it's maybe 2 p.m., it's not open yet, there may be problems with some of the pricing, okay? So just make sure that you follow the indicated price. There's a couple Twitter accounts you can follow for that. There's various resources you could do for that. So just make sure that the pricing seems to be intact with where your research shows that it should come out to, because if it's taking too long, there may not be the right supply versus demand equation that gives you these winners. So all the examples that we showed you roughly opened up without any issues, and they opened up in those time frames. So the longer it takes and the more issues there are possibly, watch our show, watch other shows. There is information out there. So, be very careful about that. Just make sure all the ducks are lined up, before you take that.
There we go. An entire strategy packaged in a nice box, and we'll just hand it right off to you. So now you can go and take that and have a look at all the IPOs that come out over the next few weeks and months, guys. Again, understand that strategies come into and out of favor. So this, yes, is working very nicely as we saw right now, but that doesn't mean a couple of weeks from now or a month from now or 3 months from now, it still will be. So again, track your results and watch the trades carefully to make sure it is still in favor. Hope you enjoyed that one, guys. Here's Valeria.
Hey guys, thank you for sharing this helpful information. Dear viewers, please subscribe to this channel to see more great videos.